Today we have a very exciting lineup. We're going to talk about copper. So I will make a presentation and then followed by Vizsla copper. And then you can have a Q&A from all the audience. So make sure you can click on the Q&A button and ask any questions about that specific company. Which right now first is Vizsla copper, and then I will do, we can answer any question you have. Then we'll follow with my good friend Robert Sinn, who's a guru in technical analysis. Then we have American Eagle, Intrepid Q&A, and Intrepid Metal, and Q&A. Finally, my good friend Tavi Costa will come up and moderate a general discussion of the copper market. Okay, without too much delay, let's get started. Okay, so I'm very excited about what we have right now. We are living a very exciting time. The artificial intelligence going to change the world as we know it. So that's my topic. I think the AI and its impact to the enormous impact to the copper market. So there's a usual disclaimer. Okay, so this is me. I'm not a gold bug, silver bug, or copper bug. Okay, I'm a generalist. Actually, I invest in different sectors, including metal and energy, and as well biotech. Last year, we hit the #1 biotech in the United States. So this is my talk 2 years ago. My talk last year, the gold rush, actually gold took off a few months later. So this is what excites me. Okay, this is a quote from Jamie Dimon only 2 months ago. He thinks this is the artificial intelligence going to be as important as the printing press, steam engine, electricity, computing, and internet. So first, let's talk about the negative of the copper market is China's housing market. This is the picture I took, actually. I took when I visited China about 6 months ago, okay? So I was at a hotel, and then this building, empty building, actually blocked my view of ocean view. The other side is ocean. So actually, I went there. I saw the gate is a little bit odd. No cars coming in and out, and I turn around and go to the ocean side, this abandoned building. So that's a really negative for the copper market. And as we've seen, the China started to accumulate copper. Okay, it's continued to accumulate this, but I will show you later. So they continue to accumulate. They sold some in May. Okay, as I said in the previous silver seminar. Why are they the sharp accumulation of copper? So are they front-running us? Yes. Why are they front-running us? So basically what I heard was, well, through my contact, that the order of the component, electronic component for the AI, like a transformer, all these use a lot of copper, those going up through the roof. We're talking about 1,000% increase. So that's when they saw the order book, they start buying copper in anticipation. So I recommend the copper in March, just in time. If you look at the copper, this chart, okay, so the March is around here. So it was pretty good, a timely recommendation. And I just see also the copper chart, okay, where we are. So a lot of people ask me where we are in the copper. Copper is crashing. Okay, maybe we'll have a surplus of copper. So those actually, if you look at the chart, this is I just made it today. Okay, this is as of this morning. So we have a big squeeze in May. Okay, what happened was that there's a lot of selling. Chinese are selling into this squeeze actually because they have so much inventory. As I said, after May, China has a week-long holiday. After May, you can see what they're selling from the chart. You can see that they were selling copper. So actually, somehow they destroy this squeeze. So actually, investors are in balance. Okay, so they have too much copper, and then we can start to sell. So look at this. I saw 250 could be a good support, but if you look at some great support area, could be the 230 area. We're not very far away from that. Okay, on the contrary, we're very close. And then in bull market, it's always this kind of overshoot and then come back and then come back again. So let's watch copper for the next few weeks. Let's see if they can settle above the 430 and then turn up. That will be very important and very positive for copper. Though I'm just telling you, this is a great bull market of copper. This is what the forecast is, and we are just only at the very beginning of this great bull market right here. So, so this one I want to show you this as this very interesting chart. Okay, so from this chart you can understand. I just got it from Lizard. Okay, this is a very well-known firm. They're talking about United States. Okay, so how to generate electricity. From this chart you can see exactly why Microsoft went for solar when they build their AI farm. You see the solar, if you're big, your rooftop quite expensive, but if utility is quite cheap, okay, and then if you want to have a storage with battery, it's also competitive. Actually, for AI center, you need a battery. Even in my home computer, I have a battery backup in case we run out of power. So for them, for the AI center, the battery power is necessary. So this is becoming the actual cost. Okay, the construction cost is cheaper, almost as cheap as wind, okay, and cheaper than most other except for the gas, okay, natural gas. But you don't need to continue supply with natural gas, right? So all these other source, coal or gas or whatsoever, even nuclear, you need to continue to supply the fuel, which solar power does not. So that's why Microsoft went to the solar route. Right, so it's extremely positive to silver, actually, also very positive to copper. So basically, you replace the traditional way of generating power to a new way of generating power, and that's require a lot of silver and a lot of copper. So let's look at it. This is one of the largest car maker from China called BYD. They just released a 5th generation hybrid. So this one actually shakes the world. There's a lot of talk outside United States because they can run, one tank of gas can run from Toronto all the way to Florida. So it's broke the world record, right? So and it's not competing with because they're not coming in United States, but they're competing with Toyota, Honda outside United States. So actually, Toyota, Honda are coming together to form a line to compete with them. So one of the major changes they made to the hybrid, why it's so efficient, the take-off transmission. Remember, when driving a car, I haven't driven any cars, hybrid or regular car without transmission, right? Transmission is part of modern automobile. This was taken out. So they switched to electronic motor. So you can see it's a lot of mechanics taken out of the car, copper-related electronics going into the car. So in the future, the car will be more and more efficient, but then you need more and more copper. I believe Toyota, Honda, Nissan will come up with maybe better solution, probably without transmission as well. And then they will come to the United States in a few years, and that will change the way we drive automobile in the future. And then, well, that's unfortunately, we are heading toward World War III. So what are going to be fought by drone, by robot, right? This is actually a Chinese robot dog. I mean, actually, they want to equip each soldier with this dog so that the dog can go out shooting people. Actually, they were hiding behind, use the remote control. So you can see this, we need the millions and millions of these. Okay, and all these require all the different material, including copper as a key component. So AI investment, AI, another part of that potential thesis, World War III, technology war, whatsoever. So last year already exploded. This year going to be over the roof. So that's investment. So we need a lot more copper down the road. Okay, we need a copper, silver, and all the different materials. And right now, there's a huge amount of money on the sideline. A lot of people coming to me are very frustrated. They say, Chen, the junior market is not moving. It's not moving. I know, I'm frustrated as well. Okay, but when they move, it's very hard to chase. I'm telling you, because there's so much money on the sideline, and they were just collecting 5%. The Fed will likely cut in September or sometime in November this year. And when they cut, all the money come in, when they push, we will have a run of our lifetime. So that's why it is very important to pick your target. We have 3 great companies here. So you can come here to ask the management, to listen to their presentation, ask any question you have. So personally, I believe we are in a great bull market of commodity. Okay, so look at this. The commodities valuation is at all-time low, and it's only going up from here. Even from robot, from drone, from ore, from electrification, everything pointing to a higher commodity price. So that's why, and then look at this, the chart here. Okay, and this is a little bit old. We probably breaking out a little bit more. So, but it's great chart. So again, finally, this is what I do, and I invest in multiple sectors. I look at around to see the best available, and I think copper is one of the key investment. Everybody should look right now, especially right now. We're in the down market. It's very good to pick the long-term winner from here. Okay, and then you can go to chenpicks.com for more information. And then also I partner with Jay Taylor. Actually, I just appeared to his radio channel to talk about all the different idea I have. Okay, so all right, so that's the end of my presentation. Thank you for listening. Now we're going to turn to Vizsla Copper. Remember, Vizsla Silver was one of the great success in the Silver Juniors. And then we have great Craig Parry here talking about the upcoming new company, Vizsla Copper. Go ahead, Craig.
Fantastic. Thanks, Chen. And thank you for joining us. Really great start, as always. I really appreciate your commentary on these things. Copper prices come off. I wouldn't worry too much about that, other than to say that I think that it presents an extraordinary buying opportunity for investors. I've just put more money into Vizsla Copper. We'll continue to do so. It's an anomaly in the market right at the moment. Where a lot of things are undervalued because of the downturn we've been through. The past 18 months have been some of the worst. I think February, worst I've ever seen in markets in 25 years of doing this, and that presents an opportunity. Serious mispricing of assets is going on as we speak. That will change. And I note, one of the viewers here today had a very good question. It's hard to find value in copper explorers. Well, hopefully we can dispel that, because if you look at what we've got here at Vizsla Copper, a huge resource base of good grade copper with a huge amount of exploration potential, all for a $16 million valuation. To put that in context, you look at Robert Friedland's Ivanhoe Mines, that company's got a $22 billion market capitalization today. So if you get it right, even in a downturn, you can go well. But what I'm going to tell you today is that the copper price is about to take off, and it's about to go ballistic and parabolic. You want to get as much exposure to pounds of copper in the ground and exploration potential as you can, and that's what we've got here. A little bit more about copper. One of the important things is that when you make a discovery, it still matters, and we saw that in a company that came out of my office here, Hercules Silver, big on the TSXV. It went from about 10 cents all the way to $1.80 there in its recent runs, now trading around 80 cents again. A 10 bagger from a good quality copper discovery in a down market. So discovery still matters. So you want exposure to those good quality exploration stories. And what sort of returns can you get from a rising tide, a copper market that goes up dramatically? We saw that in a few companies there. We name Oxiana, which I was involved in, First Quantum Lumina, Capstone. Extraordinary returns. You look at Oxiana, 10,000% or 100 times your money if you'd have invested at the start of the bull market. What I'm saying to you now is Vizsla Copper is a good example of that kind of asymmetric return that comes out of a bull market. Certainly there will be 100 baggers in this next copper run up. You want to get positioned now. Don't wait too long. And this little pullback in the copper price, very short-term phenomena. I invest for the longer term, at least a 5 to 10 year time horizon. If you take that approach, don't trade the market. Get set now. you'll do very, very well. The combined market cap of the sector since 2021 and that little bull market we had, it was about $500 billion. $500 million in the copper juniors and copper explorers. It's now back at about 300 million, so nearly halved in the last 3 years, and that just emphasises the buying opportunity that is out there. Interestingly enough, there's an error on this slide, I should say, but if you look at our projects as an example of the opportunity, our projects have actually had upwards of $70 million in today's dollars spent on those projects. We've bought them for about $12.6 million in total consideration, and for that we get 4 billion pounds of copper in the ground, 1.7 million ounces of gold, and a huge amount of exploration upside. So, there are still bargains around. They won't last long. So if you like the copper thesis, you can build a basket of copper juniors. I see a question there about Kodiak. Of course, we've got two other very good copper explorers on the slate today. You can build a basket of those. What I tend to do is identify companies with a resource base already in place that gives you leverage, strong leverage to a rising copper price. And with plenty of exploration potential. And of course, as always, you want to invest with people and teams that know what they're doing, that can get in, raise capital, promote a story, and do the work on the ground. And that's what we have at Vizsla Copper. We've got a tremendous group of people behind us. Mike Connaught, co-founder of Vizsla Silver, with me. Vizsla Silver, I think, is going to be one of the great stories of the next 5 years. Certainly been a success for us. We started that company at about a 5 cent or $2 million market capitalization 5 years ago. It's now a $600 or $700 million company, and we'll be building one of the best silver and biggest silver mines in the world. Simon Smirlek, importantly, has joined us here at Inventor Capital and both Vizsla Silver and Vizsla Copper. Simon's got probably the biggest track record of mine building experience anywhere globally in the last 20 years. Simon's led teams to build, as COO of Ausenco Engineering, teams to build well over 50 major mines around the world, including the last two major copper mines that were commissioned down in Peru and Chile. Steve Blower, our VP of Exploration, may not need much introduction to any of you, but Steve's been one of the most successful uranium explorers, but has a long history of BC porphyry copper experience, having been the chief geologist at Huckleberry Mine, which is just down the road from our projects. Very quickly, and I'm not going to have much time to talk about these things, but we're seeing a huge amount of influx from the majors back into Canada and British Columbia, and all of that investment on that page there is extraordinary. And I can tell you more and more majors are starting to talk to us and other companies in the district. What do you get for the $16 million valuation, the very cheap entry price into our company? Well, as I say, we've got 4 major projects. Woodjam is the most prominent, where we've got 1.7 billion pounds of copper proven up already, and nearly 1 million ounces of gold. We announced the acquisition of Universal Copper a couple of months ago. We completed that transaction a month ago for the princely sum of $2.5 million worth of stock in our company. We're acquired another 2 billion pounds of copper in the ground and 750,000 ounces of gold. I've just been to that project, and I'll come to that very quickly before I run out of time. On our Woodjam project, if I were to say the criticism we get on this project is that people say, okay, like a lot of British Columbian porphyries, this is a little bit low grade at 0.5% copper equivalent. We think a much higher copper price that's coming, and I'm on record as saying that we'll see $20 or $30 per pound of copper. Just to put that in context before I get off that, the market, of course, Cobre Panama coming offline, Chen took 400,000 tonnes of copper out of the market, and that was enough to increase the price by 50%. By the back end of this decade, we're going to see a shortfall of about 6 to 7 million tonnes from the market. That has the potential to drive the copper price up to $20 or $30 a pound. So don't worry too much about lower grades, but I can tell you we have higher grade targets and higher grade drill holes in this area, and we'll be testing some of those in the summer. We just raised $5 million. We've raised over the past 3 months a bit over $6 million. So we're well funded to do this work, and we're right next door to the Mount Polly mine, only 10 kilometres away from the property. So a great place to explore. I won't get into details. Certainly people can go to www.vizslacopper.ca and check out these details. But I draw your attention to some of the higher grade drill hits that we've had on the property over time. I think the best of which was 110 metres at about 2.7% copper equivalent. So there's high grade on this project. Red gold sits right next door to Mount Polly, copper and gold oozing out of the ground there. We've got a huge number of targets. And I mentioned the Poplar project, which we just acquired. I'm very, very excited about this. I spent last week in the field. We acquired Universal Copper, which had this project, a very, very big property in proven porphyry terrain. We're south of the main highway there at Houston in central British Columbia. Huge number of porphyries. Surge Copper is a company that I've been heavily involved with and am a major shareholder and been on the board there. They have the Berg and Berget properties and the Utsa and Ox and Seal porphyries just south of our property here. So what we have here is a proven porphyry terrain. It's really seen no exploration or not much in the past 20 or 30 years. Utah Copper came onto the property in the 70s, immediately discovered an outcropping porphyry copper system called the Poplar deposit. They then spent a huge amount of money back in those days drilling that deposit out, and that gives us that fantastic big resource base that very much underpins the value of this project. Certainly, it's worth a lot more than the 2.5 million worth of stock that we paid for it. So it was a real bargain for us. As I say, I just got back from the field, and I'm very excited by what I saw in that time. At our Copper Pond area to the south of the property in this zone here, we saw a huge amount of alteration sitting on a big structure, and in fact actually walked across some ground and found a porphyry rocks full of sulfide that have undocumented and never been drilled. So and then over in the eastern part of the area, we found another outcropping porphyry, again never drilled. So and in my career, I've been doing this for 25 years, as I say. I lived in northern Chile when I worked for Rio Tinto back in 2003-4. I think in that time, Rio Tinto had sort of stumbled across one porphyry copper outcropping out of the ground. Here in 2 days, we found 2 outcropping porphyry copper systems or porphyry systems that are untested yet. So we're looking forward to getting in and drilling those with the money that we've just raised. I think it's an extraordinarily prospective part of the world and something that we're looking forward to. As I say, shares outstanding. We've got a 181 million outstanding now. We just did a financing that was heavily oversubscribed. We went out to get $3 million to fund our summer program and came away with 5.3 million. So people are starting to cotton on. And if you're looking for value, we're trading at 9 cents a share or about a 16 or 17 million market cap today. Well-funded, well-run company. It's an extraordinary bargain, I think. And as the copper price moves up and we continue our good exploration work, we're set for a re-rating. So that's really it. Chen, I see there's probably a few more questions coming through. And a little bit about our exploration plan. So we're working on that at the moment. We want to kick off drilling late June. We'll be drilling in and around some of those high-grade hits that we've had there at Wood Jam, and also looking to do some drilling at our red gold project. And we'll work out what to do at Poplar as we go over the next few months, but there is a chance that we'll be doing some drilling there. So really high impact exploration in what should be an excellent copper market for the next few years. That's probably enough from me for the moment, Chen.
Okay, great. So I know so you're answering some of the questions. One of the questions from audience, what is the summer exploration focus for you?
Yeah, very much. Really, we want to get in and do some drilling. I guess we were pleasantly surprised by the amount of capital that we got thrown at us in this financing. So there are some, I mentioned that 110 metres at 2.7% copper equivalent from the Megabuck and Deerhorn area. that hasn't been closed off at depth. So we want to get in and drill under that. And I think we're a good chance of getting good results out of that zone. Mount Polly have been putting out some pretty spectacular drill results, 100 meters plus at north of % copper in recent times. That red gold property sits 10 kilometers to the south of those drill holes. We know there's some metal on the ground there. We really want to get in and test that. We also, someone's mentioned or asked a question about Kodiak copper. We have a project called Copper View just to the north, only 3 kilometers north of Kodiak's fantastic gate zone discovery. And we have some similar geophysical signatures that suggest that we could have targets that look like that. So I'd love to actually get out there and do some high impact exploration stuff on that property this summer as well. And then Poplar, we're just sort of digesting. The guys actually just pulled out all the core on Thursday and Friday, and we're looking at that and trying to understand that better. But suffice to say, we've got some pretty juicy targets from what we saw on the ground last week. So we'll do geophysics over those areas, prove up targets, and hopefully get to drill them this year. But I'm very excited. It's very, very rare in a geologist's life that you find an undocumented outcropping porphyry system on the ground, and that's what we've done there. So I'm excited for that, Chen.
Well, great project. Look like you're going to have a very exciting summer coming. So can you just remind us what the scale of yours, how much pound of copper just in current resource? I mean, I know you're going to explore and expand. How many billions of pound of copper equivalent you have, copper and gold, I mean?
Yeah, what I like about this and why we got into it, Chen, certainly I'd like to build up a pipeline of projects. What we're trying to do here, I've built a number of copper companies over the year, but none of those have become producers. I'm really what I'm trying to do, or what we're trying to do, is build a mid-tier copper producer in record time. So we have other acquisitions that we'd love to get in and make. We've got a great pipeline of projects there. I think that there will be some prizes from the Poplar project in particular, where the mineralization actually outcrops. So, low strip ratio mining type scenarios. So I think we'll have a mining project there when we get going in the not too distant future. But at the moment, we've got 4 billion pounds of copper and nearly 2 million ounces of gold. So you've got really strong exposure to all of that metal in the ground at a very low entry price, with a huge amount of exploration upside, and a team that's determined to get in and find and acquire other projects and get on to building a company. And, you don't need to look too far to find great examples of what you can do in the space. If you look at Capstone, Hudbay, and particularly Ivanhoe, building a serious copper producer can deliver extraordinary shareholder returns.
Absolutely. I was involved in Capstone in last cycle early, and that's how many, 5-10 bagger, I don't quite remember. Also Hudbay. And now this cycle also got involved in Hudbay. So it's a small world. And there is also a little miner called Taseko. I was involved in last cycle as well. So yeah, those, I know how much leverage they have, and then they can extraordinary profit can be achieved for copper miner.
Yeah, absolutely.
So there's another question coming out. What's the size of the price? They're looking at, I know you're looking at 200 meter of, you had 200 meter, 2% or something, a very high grade. So what kind of price you're looking for the summer drilling? Very quickly, we only have a minute left.
Chen, I'd love to see, firstly, from the Woodjam property, some more high grade hits and really testing those higher grade zones at depth. That means that we will be drilling through areas where we know there's high grade mineralization. If you look, I think you've got American Eagle on this presentation. Those guys have had some really, really juicy drill hits, and their share price has performed accordingly. We'd like to replicate some of that success. We do want to get in, test some of those excellent red gold targets we've got, and then perhaps get down to Copper View and do some high impact exploration work down there as well. We'll be judicious with our spend. Of course, you've got to be very careful in these sorts of tricky markets, not just to blow all your cash at once. And we won't be doing that. But we'll be getting in and doing some high impact exploration work, which includes drilling. And I think, we're only about 10 days away from the start of the first of our drill program. So look out for news on that front, and lots of news to come over the next couple of months as we look at all of that data from Popular and figure out more about the project. And now that we've got boots on the ground as well.
Okay, great. That's a great segue. And then we come back next to my good friend Robert Sinn and American Eagle. That, as you mentioned, they have some very exciting results, and then you're looking for replicate their success. Welcome, Robert. Continue.
Thanks, Chen. Yeah, it's a pleasure. Yeah, it's American Eagle and Intrepid Metals. I got two. So yeah, my name is Robert Sinn, and my presentation is titled "A Pause to Reflect, to Refresh." A pause to get a bit refreshed as copper bulls got very excited in April and May. In January and February, nobody was really talking about copper. And actually, Chen had a slide where he showed where the Chinese started to accumulate copper in January and February. China is very often a very shrewd participant in the copper market. And that time was no different. They were buying at 375, 380 a pound. They were buying low. And then I think Chen said they took some profits at the end of May, and it kind of, started this pullback that we're in. Copper hit 520 a pound on May 20th. Every financial network was talking about copper. All the copper guys were, making the rounds on TV, and sure enough, we got a pullback here. Pretty good one now, down to 445 from 520 in just under a month. But I think this pullback is a real opportunity, and I actually would not be upset if copper dropped all the way to $4 a pound in the next couple of months, because I think it'll be a tremendous opportunity. So as usual, the forward-looking statements. And then, as Chen said, I'm a technician, so we look at the monthly copper chart, and we can see that May candlestick with the big wick, that big tail there at the top of the candlestick, and that's a sign that we got, rejected above $4.80 a pound. And everybody focuses on round numbers, and $5 is a round number, obviously, for copper, but 480 is actually the technical level. So in the future, let's say 4 months from now, copper makes a close in September above 480 a pound. Well, you can tell your friends that we just had a breakout in copper, a long-term one. And even if it's not above 5, if it's 490 or 495, that's still a breakout. That'll be a new, monthly closing high for copper. And, like I said, I think that it would be fantastic if we reset at a higher base, and our new higher base is $4 a pound as the support level. We might not even have to go all the way down to $4 a pound. We could find support here at 430 or 440. Obviously, I don't know the future, but just looking at the structure of these candlesticks, I think we're going to need to have another couple months sort of cooling off. And that's not something that investors should be upset about. Again, I think it's a fantastic opportunity. And as Craig said, the fact that a copper explorer market cap in Canada is like $300 million, that's ridiculously low. It should be $3 billion, and I think that as the copper bull market expands over the next couple of years, I think we're going to see a tremendous re-rating and sort of that Robert Friedland, all of his, little expressions where you're trying to cram a big elephant through a small door or something like that, right? I think that's what we're going to see in copper juniors. And I really want to own the ones that have projects that can get permitted. That should be your number one question when you're looking at a copper junior, is can this actually get permitted? And does it have grades, the kind of grade profile that could be a real mine, right? I'm not going to go through all these bullet points. I think Chen covered a bunch of them about the AI, the data centers. That the data center angle is pretty new. Like, it's new in the last year. And we don't even know how powerful the consumption from data centers is going to be. But early signs are it is potent. Okay, this is a big driver, and we've just scratched the surface in terms of how big a driver this could be by 2026. It could be 160,000 tons a year, maybe even more than that. We could talk about the green economy and EVs and solar farms and how copper touches everything that we touch as human beings. Like copper touches every human being in some way, shape, or form. And that's a really cool thing about this red metal, right? It's something that I can talk about to my waiter. I don't need to talk about boring lead or zinc or gold, which is kind of a bit opaque, and a lot of people don't understand why gold is $2,400 an ounce. But copper is something that everybody can get, and that's why I love talking about copper. And again, I think we've just scratched the surface from the investment side of it. Okay, now we can talk about all the consumption drivers and how much copper we're going to need by 2030 or 2040 or 2050. All those forecasts are going to be wrong. You can absolutely guarantee that, but we're probably going to need a lot more. So you can bet on that. What I'm really interested in is the supply side. And forget about all the other stuff in this graphic. Just look at that black line and how it's flattening out over the next few years, and then it's going to be trending lower all the way to 2050. And that's the supply side. And that's really what a copper investor needs to get. The supply simply just isn't there. The number one copper country in the world is, Chile. Their production is declining. So the biggest mines, biggest countries in the copper space are declining. To permit a new copper mine, I mean, it's minimum 20 years. I know we talk about 17 or 18 years. I think that's actually kind of optimistic these days. Nobody wants a mine in their backyard. There's all the environmentalists who want to impose. It's their job to just oppose any new mining project, right? So that's something you really want to think about when you're looking at a new deposit. Who's going to oppose this, and what are the chances this could get permitted? The Resolution mine or project, it's not a mine yet, in Arizona, is a beautiful copper deposit. I mean, it's world class. It doesn't get any better in terms of grade and scale. The two biggest mining companies in the world, they have basically unlimited capital. They still can't get this thing permitted. It's been 26 years. So the mining state in the US is Arizona. The two biggest mining companies in the world own this project, and they still can't get it permitted. It's cost them $2 billion in 26 years. Where will the copper come from? These are the top 10 projects out there in the world. Probably half of these are dead on arrival. Like Pebble, it's basically got no shot of being permitted due to environmental things. There's a bunch of other here on this list that have social issues. And other than like KSM has been around for 20 years. Like, well, what are they doing? It's not even in the permitting stage, right? It's massive, and everybody knows it's massive, but why aren't they building it, right? So you really need to think about that when you're looking at juniors. And the two I have on my panel today, I think these, once they get to that stage, they're in places where you could actually get permitted and you could build a mine. And so we're going to need, the simple takeaway from this graphic is we're going to need 8 mega copper mines by 2030 to bridge the gap. And I say mega, I mean like the biggest ones you could possibly build. We need 8 of them by 2030. Well, I'm checking my phone, it's 2024. I know the mining business, there is no chance that we're going to have 8 built by 2030. There's zero chance. You could bet on that. We're in deficit right now, and the deficit's going to get bigger next year, and then it's only going to get bigger. So when you're in deficit, you need the price of the commodity to go up to impinge the consumption and bring on new supply. So copper price has to go up. This is sort of a newer version of the slide Chen had. Why is China consuming and stockpiling so much? I think Chen had some good answers to that. China's sort of a black box for me. I don't really understand it, but I know they're smart, and I want to be on the same side of the trade as them. The price has to go up. So just one takeaway. If there's only one thing you take away from my presentation, price go up. Copper price has to go up. And I want to own juniors that could take advantage of that and actually bring forth a project that could sort of help bridge that deficit in the next 10, 15 years. So that's my presentation. Tony Moreau of American Eagle Gold. He's the CEO of American Eagle Gold. I'm going to hand it off to Tony, a stock that I own and a company that I'm a big fan of.
Thanks a lot, Robert, and thanks for everyone for participating in this. So I'm going to start off. Our company is called American Eagle Gold. I'm going to call it American Eagle Copper and Gold so people can stop asking questions whether or not we have copper, why we're called gold. The symbol is AE on the TSX Venture. If you have to know anything, that's what you should know. It is Canada's most exciting porphyry discovery. If you know something more exciting, feel free to email me, amoreau@americaneaglegold.ca. This is our site. That is a clear cut. This gives you an idea of how great our infrastructure is. I tell people this right now. We don't use a helicopter. We can drive a golf cart right onto our property. And infrastructure is very important. It's about half the price to drill on our property in the Babine region than it is to drill in the Golden Triangle. So just starting there, remember our symbol, AE on the TSX Venture. Now, look, I'm not going to tell you macro tips. You probably don't want to listen to me. You'll probably lose money. I think any macro tips coming out there, you flip a coin. But I will give you some tips investing in the junior mining space, at least in my honest opinion. And they're 5 C's. And I believe we have each of those 5 C's. First C is Canada. Our projects in Canada, I think if you invest in any junior company, should be in a safe jurisdiction. When I'm looking at safe jurisdictions, I look at 3 places: United States of America, Canada, or Australia. And I personally like Canada. With Panama and the whole thing with First Quantum happening, I think every other country is kind of off the tables with geopolitical risk. So, American Eagle's NAC projects right in central BC. It's a great country to be in. Second thing, any junior company you look at, it doesn't matter if they're the greatest property in the world. The most important thing is having cash. We have cash. We have $15 million of cash. We have enough cash that the interest rate that we get in the bank will pay for our G&A. So that's a big thing. We are cashed up for this year and next year for 2 programs that are bigger combined each year than the historical work that we've done in the last 2 years on our property. The third thing's copper. That's another C. Copper, I think, is going to be the best metal moving forward for all the things that Robert just said. Robert, thank you for saving 30 seconds of my time. The fourth C is a credible partner. It's hard. A lot of people didn't know who we were. There's 1,000 other CEOs saying the same thing that I say. I got the best project. And I always say it's like getting stuck in an avalanche. You don't know what's up or down, who's telling lies, who's not. You need a credible investor, partner. You could have letter writers, etc. But the best investors are guys that spend a year. They put $5 million into your projects. They have guys that have developed, built, found mines. That's Tech Resource. They didn't do 1, they didn't do 2, they did 3 investments with us last year. Each one's at a premium without a warrant. They believed in us. They put blood, sweat, and tears into our projects. They found a mine called Hemlo, Voisey's Bay, Afton, etc. Maybe the next one is NAC. So we have a credible partner. Fourth C. The fifth C, extra. We need news. It's catalyst. So we have a lot of news coming out. We just started drilling. We're about 1/10 through our program. We're going to have news coming all the way throughout the year. So we're in Canada. We got cash. But the other thing is, you want reasons for the stock to go up. We have a lot of news coming out. And the only thing that can create a strategic increase in your stock price is your drill holes. So we're going to hopefully have a lot of great drill holes to announce in the upcoming months. I got a bonus C for everyone. We have a Chilean hole in BC. So I believe we had a lot of great drill holes in our 16 previous drill holes before we released 2317. But it was a pretty crappy market. You don't need good drill holes. You don't need great drill holes. You need exceptional drill holes. So this hole we ended up with last year, we're trading about 26 cents, 302 meters of 1.09% copper equivalent from 85 meters down hole within 606 of 0.74. That's an exceptional hole. That hole is good in Chile. It's good in the Congo. It's certainly great in Canada. And we defied the odds. So our stock went from 26 cents. It hit all the way to 83 cents because people just didn't spend 10 seconds to look at us. What they did is they spent 10 minutes and they peeled the onion and they realized we got a lot of great results that nobody even knew about. So if you look at our 16 previous holes before 2317, I would say about 6 of them would be deemed great holes in BC. And that's what people started to realize. And even some of our quote unquote weaker holes, called 800 meters of 0.22% copper equivalent, they did intersect high grade somewhere within that. And there's a lot of smoke there, and you can only be lucky so far. And we've hit copper and gold in every single hole. And if this was a mine, it'd all be mineable. So that's kind of what the stock didn't go up because of 2317. 2317 allowed people to look at our company in a hole and realize we have a lot more to the story than one drill hole. Now, next slide. I'm going to give a quick oral history of NAC. I'm going to back up a bit. Maybe some people don't know about NAC. So let me start off really quickly. So that's my uncle there in the top left right here. Here's the reason why I got into mining. His name was Gary Artmont. He found this project called NAC. And this next picture here, that's him in Indonesia. He was the chief exploration geologist for Freeport-McMoRan for the Grasberg mine. And he was my favorite uncle, and I'm guessing I was maybe his favorite nephew. And he said, Tony, you need to get this project. He was the second best geophysical target I have ever seen. And I said, Gary, well, you know, they've done a lot of historical drilling, a lot of different owners there. Like, I don't know if it's going to work for us. I said no to it twice. Eventually came to me and he grabbed me and he goes, you're a bean counter. Trust me on this. I'm going to be right. So we ended up getting it. And what happened was we looked at the historical work, and Noranda was there before. Noranda actually gave an assay of their stuff. And they actually had a lot of great drill holes. But the problem was when they last drilled this program, in a big program in 1995-96, guess what copper price was at? 60 cents a pound. Gold was at $400 an ounce. You couldn't have access. You had to take helicopter, and people were looking for something close to surface, and they just left it. And my uncle says, this is the real deal. He gave it a comparison to Red Chris. Red Chris has pretty decent stuff at surface, but you know the reason why Newmont bought them was because the stuff at depth starting about 1,000 meters. So he said, you guys got to hit the deep hot spot, the jewel box he called it, at depth, do vertical holes and try and hit that heat source. He goes, I know it's there. So we did 7 holes. 4 of the 7 were vertical. And on our first hole, this is what kind of changed everything. We hit 125 meters of almost 1.1% copper equivalent from surface. And no one had hit such a great drill hole before. And we knew that could be the start of a mine. And we started to hit stuff at medium depth and at deep depth. And from that information on a 7 drill hole program, Tech Resources came in and they invested in us 3 times. And that kind of put us on the map and made people realize, you know, American Eagle and NAC, you know, actually is for real. And on the back of that, it gave us more money to drill. We got a lot more money after that. Now we're sitting with $15 million in the bank. And now we can sit back and comfortably drill and follow a plan. So that's what we're doing right now. That's history. Now, the one thing I got to say, my uncle actually passed away 2 weeks after we started drilling, and he was obsessed with geology. And he said, I'm going to sit here in my room in Ecuador, and I'll know from the core whether or not I'm right. And we first pulled that core of the ground for 2201. He called me on Skype. He said, I'm right about this. This is going to be a deposit. And so far, so good. We've changed our price from 2 cents to 81 cents in about 18 months. So far, my uncle's right. I know he's looking down on us. And the great thing about our property, we're located in Canada, and not only Canada, in an area with great infrastructure. We're right near Smithers, BC. It's about an hour flight from Vancouver. And from Smithers, about an hour, 15 minutes to site. So it's got great infrastructure, access to power, access to people, ability to drill all the year round. And that's important because, you know, if you're going to build a mine, you want to be somewhere where people want to live. This is kind of reminds me of Collingwood, Ontario a bit. It's a really nice town. So yeah, infrastructure is really the key. This is our 2024 drill program. Those white little dots you see there, those are our collars. We drilled pretty much along a fence, 200 meters wide, 750 meters north to south. 4 of the 7 were vertical. The other 2 of 7 were going kind of north-south in a line. So we drilled along a very narrow fence. We hit on all the holes. 2204 and 2201 and 2202 were the best holes that we had. Those yellow holes were our collars for 2023 after Tech invested in us. 2308 was actually going to kind of take some of that nice high grade that we got in 2201, but we ended up hitting stuff all the way going west where no one had ever drilled. It was 775 meters of 0.5% copper equivalent. And in this business, you kind of almost have to fake it till you make it. And at that point, I realized this thing's going to be a mine. That's a huge intercept. And we kept on hitting great stuff after that. Now, those 2 little green boxes you see, those are areas that have never, ever been drilled on our property. And those are the areas where we've seen the most joy. So that's kind of our opportunity, and that's where we're going to focus in 2024. Now, I'm going to kind of go next to the plan of 2024. So we got kind of a 3-step plan here. Those red boxes are our near-term plan. Charlie Gregg, who runs CJ Gregg and Associates, He's the guy that helped sell and find GT Gold and sold them to Newmont. He always says, don't leave the dance without the girl that you went there with. So we're drilling in that big box. We're going to connect the 2312 and 2317, show that there's scale. That little red square you see there, that's where we have high-grade gold. And that smaller square within the big red square, that's where we believe the jewel box is possibly hiding. That's kind of sourcing all this copper mineralization at surface. And then, the blue and the green squares are something we're going to go to afterwards. The one thing that Tech did ask us for 2309 was go and drill, show this thing has massive world-class scale. And I called it a drunk drill hole because there was next to no information what to drill, except it was 750 meters away from any historical drill hole. And we hit on it. So we hit about 0.4% copper equivalent from surface for 125 meters, which is great on a blind drill hole. So our big focus now is kind of walking over towards 2309 to show how that mineralization does expand. We believe that mineralization expands all the way around that little blob you see in the middle. It's a Babian porphyry stock, and it's almost like a cauldron sitting over the flames. Those flames coming around is what we think is the mineralization. So that's what we're starting to focus on this year. Now, if you look at our stock price, we're trading at about 2.5 cents November 7th, 2022. We hit as high as 83 cents. This year, we're up almost 300%. So it's a big, steady raise, and we're doing quite well. We got an $84 million market cap. We have almost $15 million in cash. I believe we only have 2 million warrants still outstanding. So a lot of blue sky ahead. People always ask me, why is the stock down? I go, well, we're up a lot. Well, you guys hit 83 cents. Well, I can't really answer why the stock's down. One thing I do know, stocks go up, stocks go down. And you're going to lose your mind trying to figure out why it kind of sells off one day or another. Market may be down. Somebody may have died. Somebody may want to buy a pool. Maybe someone's sitting at 1,000% gain. I don't know, but I focus on who's buying. So that's what I do on a day-to-day. Now, I think a lot of the people look at this. They're like, well, the guys are up like, 1,500% in the last 18 months. Maybe we missed the up wave. Now, let me show you another stock. I guess you can guess what stock this is. It's Snowline Gold. So Snowline Gold came from about a 40-cent base, and they're now trading at 540. And if you're looking at them in late 2022, maybe you're the same position you're at with American Eagle right now. Maybe you missed the run. You missed the run for 20 cents to 90 cents. But guess what? If you bought that stock at 60 cents, $1.40, it didn't really matter. It's trading at 540 right now. They have a lot of advantage. They probably got 2 years of drilling on us, but they're also based in the Yukon. We have better infrastructure, and our drilling is half the price. So we have advantages on our side. They are a great company. They got $70 million in cash, but I'm just doing a comparison. Don't look at where your stock came from. Look at the comps that you have and where you think that price can go in the future. Snowline's a great company. And Scott Birdall's an amazing guy. Now, a little update, little ode to Norm Macdonald, my favorite host of SNL Weekend Update. So NAC 2418, it's done. We TD'd at 915 meters. We're seeing great mineralization all the way through. 2419, which is a hole that's coming from around 2201, coming southeast. So trying to expand that high-grade gold at surface, but explore over to the east towards the IP embayment. We're at about 500 meters there right now, and we just collared 2420 a couple of years ago. We're closing in on 100 meters. We're doing a lot of field work with that $50 million. We don't just have to focus on drilling. We can focus on field work, and what we're trying to do is see if there's any kind of outcrops or porphyry that we can see from surface. Historically on our property, one of the reasons why they didn't do a lot of drilling after the mid-90s, they couldn't see any outcrops. So we got a field of guys going out there with picks, trying to see if anything comes to surface. Because if things come to surface, it allows your drilling and your targets to be a lot easier. I mentioned our assays. Our assays are going to come all the way up throughout the year. And I mentioned other there. Don't be surprised if there's more information coming out. We did a partnership with Tech, but what you got to realize, we don't have a ROFR with Tech. So, that's just something just to keep in mind. Now, artificial intelligence, everyone always asks me about artificial intelligence. It's really interesting. The only good thing about artificial intelligence, like Robert Sinn said, it's going to be that copper demand coming from all the AI. But, in terms of us using AI to find targets, look, I think geophysics is enough of a crapshoot on its own. Then use robots to try and understand the geophysics. I just use Charlie Gregg and stuff to try and understand this. The best use for artificial intelligence for junior mining companies, I think, don't spend the money on artificial intelligence. Put it in the NVIDIA stock. I think that's the best return you can have. AI, I think it's a way for companies at this point right now, just to say they're doing something, but it means you don't have enough cash to drill. Drilling's king. It's the only way of sustainable value, and that's what we're doing. Canada, cash, copper, credible investor, Catalyst. That's what we have. One thing I gotta say, this is not a trading stock, it's a buy and hold stock. And I said this last year, pretend you're Han Solo. I'm gonna wake you up in 2 years. Wait till we are. Just wait. And finally, remember that AETSX venture? My son Charlie turned 2 years today. That's him at our favorite pizza joint. He's a big rep for the company. I just want to say hello to him and thanks for watching.
All right, so Tony just gave investment advice to buy Nvidia stock at a $3 trillion market cap. So a year from now, when Nvidia's dropped 25%, don't get too angry at it. Okay.
Well, Rob, all your money's going to go down the drain if you spend it on AI on finding targets. Maybe you'll lose half of Nvidia.
All right. No, I'm teasing you. Okay, so we have a couple of questions from the audience. That was a great presentation. Thank you, Tony. Kind of an odd question, but I'll throw it at you anyway. How many people do you have cutting core at NAC? And how many people are allowed to touch the core, like, the drill core and the core shack?
How many people are cutting core? We have 2 core cutters. There's usually, there's 2 core cutters at once. Those guys rotate on their shift. I think I know what someone's referring to. We had a picture on Twitter where Charlie Gregg was looking at some core. People are trying to grasp on anything, but look, he was looking at the core. He's not handling the core every day. That's not even a gold ring. And he wasn't even touching the picture, but I think it's the doldrums of summer and people are grasping at straws and trying to find something to talk about. But it's I guess it's entertainment for everyone.
My question would be, so I look at your drill progress and it's exceptional. 915 meters in the first hole of this year's program, and then over 500 meters so far in hole 19. What's the rate per day that you guys are doing right now? Is it like 40 meters or more?
Yeah, look, the target's about 60 to 65 meters a day.
Okay.
We can get more some days. The other day we got 70 meters on a shift. But I think when you average, stuff that's close to surface versus stuff that's deep, which obviously takes longer, you want to average 60 to 65. Once you start pushing the guys and go faster than that, then they lose a hole or something, and they end up missing 3 days. So I think slow and steady wins the race.
And then final question, a question everybody likes to ask a lot. How long until we get assays, and how many holes do you think you'll report at a time this year?
Yeah, that's a good question. Assays are going to come out when they come out. I think I don't know when the assays are going to come out, but anywhere between now and 2 months from now. We just sent our first core out to the lab. How many we put out at a time? Definitely more than one. Probably anywhere between 2 and 4. We don't want to live and die by the drill hole. We got enough cash, but we want to tell a story. We got 2 drill rigs going out at once, and I don't think it's a single drill hole, should make or break a mine. So we want to keep traders on their feet so they're not timing when to buy and sell our stock. We want people to be long-term holders with American Eagle.
And with hole 19, is it fair to assume as long as you're seeing what you want to see in the hole, you'll keep going, and it could go to 1,000, if it's there?
Yeah, I think that's fair. I think probably 800 to 900. It's at a 55-degree incline, and the more shallow those holes are, a little bit tougher they are to drill in length. So we're aiming around 8 to 850. We got that IP embayment, and that's going to be about 200 meters short of that. But if there's something in the IP embayment, we should be coming close at the end of hole for 19. I think the holes you should be looking to go deeper are the holes, probably north of 2420 or even 2422, kind of close to where 2204 was. And those are the ones where we kind of are more steep and we're trying to hit, quote unquote, that jewel box underneath, that thing that we think is sourcing everything at surface, where all these dikes come from.
Okay, thank you, Tony. Appreciate it.
Thanks,
now I would like to introduce Ken Brophy of Intrepid Metals. Intrepid is a copper explorer in Arizona, and I had the pleasure of going to see the project in April. Ken.
Thanks, Robert. Appreciate it. Certainly thanks for the invite. Thanks to Metals Investment Forum. I got to say, a couple of great presentations by Craig and Tony, and I hope we can kind of deliver as well. So listen, everyone, obviously I'm going to be making some forward-looking statements. As Robert mentioned, we're an Arizona-focused company. In many ways, we're still a relatively new company, still very much underneath the radar for many investors. We just finished our initial drill program on our Corral Copper project, which I'll speak on the most, and we've released some fantastic results. I'm talking over 100 meters of over 1% copper, as well as over a half a gram gold, all very shallow, starting at surface, and all within our private lands in the largest copper producing state in the US, that being kind of Arizona. We certainly have more results coming kind of very soon. We have two other exciting drill ready projects also in Arizona, which I'll touch on, each of which holds significant new discovery potential. And I think we're very well positioned for the commodity super cycle that Chen mentioned earlier. And I think we've got tremendous growth. The team, of course, we've assembled a great team that really covers all of the key areas, the markets, geology, engineering, permitting, as well as sustainability. So we started off the year with a bang, really. We closed 6.6 million in January. I know the market has been tough for many, so we're very successful in being able to close what we did. Effectively, we raised it in December and closed it in January. And then began our initial drill program at Corral Copper in February. So off to a great start. We completed just shy of about 5,000 meters within 25 holes, and glad to say every hole that we drilled hit shallow mineralization, and we still have over 3 million left in the treasury. As you can see, we only have 45 million shares outstanding. Management certainly heavily invested in Crescat. They've been a great and supportive shareholder since day one. I think considering our current market cap, shares outstanding, and certainly our project portfolio, which includes shallow, high-grade copper within private lands, we're really just getting started on our growth here. So, take you around the neighborhood here. You can see the location of our projects. We have our Mesa Well Copper Project in Graham County to the north, which is home to many of the major mining companies and the large Laramide porphyry copper deposits. And then we have our Tombstone South project and our Corral Copper project, both in Cochise County and only about 30 kilometers from each other. A key takeaway from this map, and Robert touched on it earlier, all of our projects are outside national or state forests. They're all already permitted for drilling and all are in mine-friendly jurisdictions. Cochise County in particular, as an example, has a rich history of mining, with the Copper Queen mine in the town of Bisbee. It produced over 8 billion pounds of copper in its day. And then we have the Johnson Camp and Gunnison mine to the north, which have a combined 5 million pounds of copper. And it's important to point out that the Gunnison project received its mine permit back in 2019, and they got that permit in 2.5 years. Again, showing that a new mine can get built in Arizona, especially within the county that two of our key projects are in. So our Corral Copper project is really an exciting and advanced stage project that has a long history of smaller scale mining and exploration. What really makes this project so unique is we had to corral a whole bunch of fragmented land ownership. There were several different property owners, all that held different rights throughout the area. Individually, each of these areas had limited scalability. There were groups that were suing each other, and there was a lot of bad blood between property owners. However, we went about and established positive relationships as the first priority with a lot of the key stakeholders. And since that time, we've been able to acquire now over 9,500 acres, with 1,800 acres of those being, private lands and patented mining claims. I'm going to, show you here in a moment a 3-kilometer trend of all near surface mineralization. You can kind of see it on the image here as well. And it's really important to note that the source of all of this mineralization is yet to be found. And, now with our district scale property, we can start to look at this and explore it, unlike many of the other previous operators. So here you can see the 3-kilometer trend of mineralization that we've been able to identify primarily from a lot of the historical data. You can certainly see the footprint of copper, gold, silver, and zinc mineralization. So what we're really looking at is a strong polymetallic system here with valuable and essential metals such as, zinc, copper, and silver as well. And not to mention gold, which I'll touch on here as well. It's important to point out that a lot of the historical drilling was also very fragmented. Some just focused on gold exploration, some are focused on copper exploration. So again, we're just starting to piece, or we just completed piecing the property all together. Now we've got to start, piecing the geological model together. Once again, it's important to point out that the mineralization that you see here is all within our private lands. So from a drilling permit, essentially drilling Holiday and ERP, all we had to do was call the county and let them know what we're doing. So it was more of a dial before you dig type of permitting process. It wasn't a permitting process. It was just notification. That 3-kilometer trend is still only about 15% of our entire property. So it's, tremendous upside remains. So what you see here in this 3-kilometer trend is not all that we have. It's just the starting point for us. So, while we did have that advantage of having historical data, we had some drill logs, historical essay reports, and, that helped guide us once we put the information in Leapfrog, but no drill core remained. And this really goes back to that local feuding. The drill core was essentially destroyed. It was stored on the wrong guy's property. There was bankruptcies. So we really do have to drill this area. And we've certainly learned a lot by being able to see a lot of the core for the first time. So, and these are some of the results that we have. These are just some of the results that we released so far. Certainly more driller results coming very soon. And as you can see, we certainly have mineable widths of almost 200 meters starting at surface and certainly mineable grades. And again, all within our private lands. So, and we haven't drilled a hole past 300 meters. So it's really important to point out that tremendous upside remains. Certainly a highlight hole for us so far is 105 meters of 1.17% copper and 0.55 grams per ton gold. So 105 meters of 1.42% copper equivalency. And that's all within within 193 meters. Once again, starting at 27 meters, all within this 3-kilometer trend. So, tremendous upside. And I often say we're just beginning to scratch the surface. Literally, we're scratching the surface here at Corral Copper. I should add, essentially it was really only last fall when we finished corralling all of the property together, which led us to do the raise and certainly execute from a very successful phase 1 drill program. So I feel we're off to a great start with tremendous upside ahead. Quickly, so our, only about 30 kilometers from Corral Copper is our Tombstone South project. Tombstone South is a Taylor Hermosa deposit type of analog, which many might know was bought by South 32 for $1.3 billion back in 2018. However, important to remind everyone that our project is not in a national forest, which can certainly delay permitting. Tombstone South has all of the right components for what we think is a new discovery of high-grade silver, lead, zinc, and certainly the right host rocks. Silver drilled on this project is within the same type of manganese, similar to the Hermosa deposit, and South 32 determined that their manganese was also battery grade, which enabled them to enter into the FAST 41 process. So quickly, here's a conceptual type of cross-section that illustrates our targets. There's a porphyry off to the northwest, and while it's a lower grade porphyry, its importance to these large CRDs, the heat source of some of the other mineralization is key. And then we have that major fault that will provide some of the fluid flow. So we have all of the right rocks, certainly where the limestones get replaced with some of the massive sulfides. So the first thing we did, large dipole IP survey, which would enable us to see a little deeper into the limestone units. while you can often get some type of anomaly from geophysics, what we were most excited about is the strength and the location of the anomaly. It's a strong chargeability anomaly, blind chargeability anomaly. In the upper units where these large CRDs typically form, adjacent to the fault for fluid flow, and you can see some of the previous shallow drilling never tested the limestone units, but still had high-grade silver and zinc in some of those holes. Therefore, the source itself could very well be this chargeability anomaly. We want to ideally drill it this fall when we go back and do some more drilling at Corral Copper. Just real quickly, I'll touch on Mesa Well. This is our earliest stage project, certainly in the right area with the right host rocks that can lead to another new large discovery. You can see here that we're in the heart of copper country with all of the majors in the area, BHP, Freeport, and certainly some developers like Faraday Copper, who just recently raised $23 million to advance their Copper Creek project. It's only about 30 kilometers from our project. The attraction was certainly previous drilling to the north showed that the alteration and the mineralization intensity was increasing as the drilling was moving towards our project. So our view vectoring towards a source. So while this is still an earlier stage project, this project as well has tremendous potential for a new discovery. We'll require a little additional field work in geophysics before we start looking to drill. Just lastly, real quick, touch on, we have a very lean but impressive leadership team. Mark Morbido and I have worked together on several projects, two of which he's taken all the way to the New York Stock Exchange. Mark's raised over 900 million in the markets and has tremendous experience in the state of Arizona in particular, as well as Cochise County. Chris Osserman, PhD, who Robert got to meet, has certainly a track record of initial discoveries all over the globe. He's based in Tucson, and then here in Vancouver, where I'm based, we have Dan and Alan, who each again have a successful track record of exploration and new discoveries. Boards made up of technical, legal, financial expertise, and have several other advisors that can certainly add value and help us as needed. So with that, I'll take any questions. And once again, thanks, Robert, and thanks to Miff for inviting me.
Thanks, Ken. That was a great presentation. So my question would be, you're thinking around phase 2. You still have some, results still pending from phase 1, but I'm, looking ahead towards year end. What is your thinking around phase 2 in terms of the size of the program? Will it be 2 drill rigs? You mentioned Tombstone South. You said you like to drill that at the same time as you're doing phase 2 later in the year. Will you just take a rig and move it to Tombstone to put in a few holes there? Yeah, just, what are your thoughts on phase 2?
Yeah, listen, I think, once again, as I mentioned, we just finished corralling all of this. We just completed our initial drill program. So we're just starting to see some of this core for the first time. We have some historical geophysical data. We've done some recent mapping. So we want to piece the story all together. So I certainly see phase 2 at Corral Copper being larger than phase 1. I'm not quite ready to commit to a number. That being said, Tombstone South's a real exciting opportunity. We hit what we expect to hit at Tombstone South. It will be a game changer for the company. Both of them being so close, we could share the same, core facility, kind of resources, everything that we need. So I'm not prepared to add a number quite yet, but we still have 3 million in the till. I think that can give us the capital that we need to really execute on additional drilling at Corral Copper as well as Tombstone South.
Okay. And then for those who don't really understand how things work in the US, what percentage of your property package there in Arizona do you have both the surface rights and the mining rights to?
Yeah, so I often say we've got 1,800 acres of private lands. So the majority of that is made up of patent mining claims, which I touched on. To drill, we just had to call the county. It's our backyard. We can build roads. We can drill wherever we want. The one Ringo zone that I identified within that 3 kilometer trend, it does have BLM mineral, which we have certainly, but then we own the surface rights over top. So from a permitting standpoint to the BLM, as an example, we did have to provide a notice of intent to drill. We identified where the surface owners, we have no objections to us drilling this area, and we got our drill permit in just a few short weeks. So, within that 3-kilometer trend, once again, which is our private lands, that's still less than 15% of our entire property. So we got tremendous upside, certainly from the drill bit as well.
All right, final question. Someone from the audience is asking for your contact info.
Certainly you can reach the contact info. You go to our website. We got way more information than certainly I tried to cover here, but you can certainly email me at kbrophy@intrepidmetals.com.
Thanks, Ken.
Thank you, Robert.
The one and only Tavi Costa, who I enjoy tuning into on Friday afternoons. Very important voice in the junior mining sector. Go ahead, Tavi.
Well, thanks for saying that. Appreciate that, and looking forward to this presentation. All right, so let's get started. I'll try to not spend a lot of time, as if you if you've listened to some of my presentations on Friday, I tend to go a little too long. So I'm going to try to keep this one short. Since the topic is copper, I try to pick obviously a few charts that I think are relevant to the discussion. One of the things I find it interesting is always going back in history and looking at copper prices in gold terms. I find it fascinating, the fact that we, gold is always a true measurement of inflation, as most people know and would agree with probably. It is interesting that we haven't seen. Most commodities actually have drastically underperformed gold throughout the last 30 plus years or so. In fact, if you look at copper, which copper had a big run up recently, and then finally, even my neighbor was telling me about how copper is in a shortage of supply. So that gives you a sense of sentiment. And now we have things kind of sort of going back to sort of a more normal or resetting at prices that I think are going to be more sustainable. And I think I hate to use a phrase from Bill Gates, but he was absolutely right when he said, people tend to overestimate the near term movements and really underestimate the big opportunity in the long run. And I think that's certainly the case with copper. If you look at this price of copper in gold terms, it can kind of give you a sense of where things are today. And when we had the early 2000s run up, where actually copper really outperformed gold in a big way, all the way up to China was entering the WTO, was becoming a manufacturing of the global economy sort of a phase of that part of the world. And today, I would highly I guess I would set the stage for what's happening with the G7 economies, and really where most of the infrastructure developments that we're seeing and the capital is spent on construction overall is, in my view, going to dwarf even periods that we saw in the early 2000s. When people tell me, but this, in today's world, we're not going to have China like we saw in the early 2000s. Yeah, I think the difference is that rather than China, we're probably going to see most G7 economies, which are probably going to be a significantly higher amount of construction than we saw in even China. What scares me from a supply and demand standpoint, and why I get so bullish in the metals space for the next decade or so, is this chart. It's basically looking at the aggregate capex adjusted by GDP, because $10 million to spend in the ground today is certainly not the same as it was back in 2011 or even early 2000s, as it is suggested by this chart in the red line. You can see the copper prices have basically a lead on the aggregate capex. So if you're a mining company, especially those that produce metal, what they do is they wait for metal prices to rise until they start getting more comfortable and spending more capital to then redeploy money and hopefully increase supply and take advantage of higher prices. But this is an environment that I would argue that maybe we've seen this in the 1970s, but arguably, we've never seen such a tight environment when it comes to long-term supply for copper probably that we've seen in a very long time, if not history. But as you can see in this chart, metal prices have already been way up. And still, when you look at the aggregate capex for this industry, it remains historically suppressed. And what changes here? Well, there's a lot of things that are probably causing the red line to be where it is. Outside of political reasons, ESG and others, we also have the pressure from shareholders. Is still telling their companies to increase buybacks and dividends and all sorts of things, and then you have the Federal Reserve raising rates and making capital even more difficult for you to access capital markets overall. And so the red line is being pushed by a lot of things, but I find it difficult to even make the case that we're not going to see this red line starting to rise. In fact, I think one of the things that will cause will be in line with this red line will be the M&A curve of most of the major companies that will be also entering a further development in terms of engaging with other smaller companies. Another thing that comes to mind when it comes to the supply constraints certainly is, I'm picking Chile because it's sort of what Saudi Arabia is in the oil industry, which is about close to 25 to 30% of oil production globally. Chile is for copper. It's a significant amount of production of copper comes from Chile, believe it or not. And when I looked at the chart of annual production for the country, is at a 12-year low. And it's at levels that we had all the way back to 2011. Now, if you were interested, look at where global GDP has gone over the same period, and you're going to find that it's at least 40% higher than what it is right now, or used to be back in 2011. Not to mention inflation and other things that are part of the GDP calculation, but certainly I would say that supply is lagging drastically relative to where the economic activity is. Now, there's a little bit more to this, in my view, and the situation, what's happening with AI is something that is adding to the case for owning copper itself. And other metals, I think copper is just one of them, probably the main one, but there are other things that will be in the same position along with copper. Zinc is another metal I would suggest here in terms of being in a interesting setup in supply side and also on the demand side over time. But what brings up this whole idea, it's a chart that I used not too long ago, I guess, on one of our presentations here, was regarding what's happening with infrastructure spending. And this is in line with we're probably going to see in terms of the capital that will be entering the space in a big way. I look back in history and I wanted to know, is there anything close to what we're seeing in terms of the Inflation Reduction Act and the Infrastructure Act as well that has been passed already, which sums up to about 1.7 trillion. If you read the Inflation Reduction Act, there's nothing about inflation reduction. In fact, there's all about actually infrastructure developments and green revolution and other things. And when you think about it, it should be added to the infrastructure overall spending coming from the government. This is just the government alone. Imagine if we see other economies doing the same. But the point of this chart was to inflation adjust other periods in history when we had also large amounts of infrastructure developments. And what I find here is that this amount is basically 3 times what we saw coming out of the World War II globally, not just in the U.S., globally, or in the Federal Highway Act. If you recall, back in 1956 was the last time actually we saw something significant when it comes to infrastructure developments. And I think this time is going to be way higher than those periods. And so what comes to mind as well is what Elon Musk has been saying. Elon Musk had a great interview, I think it was about 6 months ago, and it's becoming relevant just now. Just recently people started to actually quote those ideas. But basically he's been all over this idea of, we've got a few buckets of the demand side that will drive copper, but really electricity demand. And that comes from electric vehicles, and like it or not, I think that's a trend that it's going to be very hard to reverse, especially when it comes from a place like China, that doesn't want to be dependent on oil, forget about the climate change and all those crazy arguments. Just from the oil dependent side is definitely, I think, a real movement for China and other economies moving towards electric vehicles. And I think that that's a even bigger side of the equation. The second thing that is happening is electric heating, which is drastically changing as well. And the third one would be AI. Artificial intelligence is going to be something, Chat GPT, a search on Chat GPT, and there's different calculations. I'm using a median of things that I've seen out there. I've seen numbers as high as 30 times more than a Google search when you search something on ChatGPT. But I actually think it's probably closer to more like a 17 times, which is insane. Nonetheless, another important chart to me is this one. When I look at the size of the semiconductor industry, which in 2011, I should say 2015, the global semiconductor industry versus the metals and mining industry used to be the same size. It's about $500 billion for both when it comes to total market cap. So the higher the semiconductor industry goes, you would suspect that the higher electricity consumption will go, and you would suspect also the copper should do much better. Remember that we're probably going to see a replacement of most computers and electronic devices that are not capable of running AI functions. Think about all the computers and laptops and phones that are going to have to be replaced in the next 5 years or so, and how much money and materials are going to be needed in order to do that, and how much we're going to see of the changes in terms of electricity consumption. Now, when I look at this chart, it comes to mind is asymmetry and a long-term thesis that I find it hard to not be so optimistic about. I think I have one more chart, and this is basically a technical chart, and just the idea of that phrase from Bill Gates, but really looking back in history again and seeing that this cup and handle is an interesting setup technically for copper. Now, I remember looking at not too long ago the triple top in gold, and a lot of people said it wouldn't break out, and here we are. And sometimes we try to be cute about looking at the markets and thinking about buying gold is a different thing than buying copper. The truth is, buying gold or copper or silver or cobalt or zinc, and majority of times, and I'm talking about 90+% of the times, if you are in a gold bull market, you're in a copper bull market, in a silver bull market, you're in a zinc bull market, and you name it. Any metal, it will be probably in a bull market as well. There are some exceptions depending on the situations, but copper certainly, in my view, doesn't fall into as an exception, and perhaps could be outperforming even further than prior cycles, given sort of the setup from the demand side that I said, which I think the supply is well known, but the demand side is certainly something that I believe will be much larger than what we've seen in the past, and probably will be even larger than what we've seen in China. So every time you see the chart of Nvidia or Nasdaq going up, I hope that reminds you of this prior chart, because I think that that's ultimately not where we're going to go ultimately, but certainly the opportunity in terms of you can see this chart in different ways. I was looking at utility companies' estimated earnings, which utility companies have if you follow earnings for utility businesses, they tend to be pretty normal growth. I mean, the growth in that space is very low, and therefore why they're seen as a proxy for bonds, because they basically don't move as much. Now we're seeing the surge of electricity consumption, therefore is causing the revenues and fundamentals, just like Nvidia we saw not too long ago. They're also on the curve that we probably haven't seen exponential growth like that in a very long time. And so that puts in perspective that if that is really what's likely to occur, you would suspect that this yellow line is completely out of whack and likely to be the major opportunity here ahead of all these changes geopolitically and also technological advancements that we're yet to see. And so copper is definitely on top of my mind. And when I look at this chart, I think the potential is technically speaking, if I just close all my fundamental and macro thesis or put those on the side, I would certainly say that these are the charts that makes me excited because I know that we've had a big run up, and now things have kind of come back to not back to earth, as you can see. It's actually quite high, the chart. But when you look at relative to gold terms, I would suspect that this is going to be the mother of all breakouts in copper, and it's going to probably also be one of the metals that will attract interest back into the mining industry, which has been neglected for a very long time and deserves to be brought back into a big picture. So with that, let's move on, because I think we're going to have a panel discussion with other folks here as well.
Fantastic. Always good to hear you speak, Tavi. I love that. I'd love to see that last chart adjusted for inflation. I started with Rio Tinto in 1999 and the copper price was 71, 72 cents. And Rio used to force us to put into our models that price diminishing at a cent a year to infinity, and hence they missed a lot of opportunities. Thankfully, of course, they had Escondida sitting there. And you talk about the supply side. I think that we all sort of hope that the demand side looks after itself, and we're seeing some big numbers out of the pundits and traders and economists and anyone who looks at metals. But the supply side is the challenge. Being on this side of the ledger, we are supply side tragics. I just, you can maybe see where 2 or 3 million tons of copper production is going to come from by the back end of the decade. And of course, you see expansions of Escondida, Chuquicamata. Well, your chart there on Chilean copper production is so very, very telling, because the expansion capacity of those major mines, Los Bronces, for example, owned by Anglo, very, very challenged now. They've gone through pretty much everything they can without, tens of billions of dollars of investment, which will come eventually. But I find it, and as I say, I think you can see where maybe 2 million tons of new production might come from, but that still leaves a 5 to perhaps 7 or 8 million ton per annum supply gap. And people are going to have to pay up. Friedland tells it best. It's the revenge of the miners that's coming. I wouldn't be surprised if we see $20 or $30 per pound copper. People talk about substitution, but I don't think you can fit big aluminium wires in your Tesla, and aluminium will go through the same supply demand factors that the copper is. So I think we're going to have a real sweet spot back end of this decade. Extraordinarily high prices. It's the place to be. There'll be great fortunes made in the copper business.
I couldn't agree more. It's interesting how the corporate developments is also telling from a cycle standpoint. I was talking, Chris Ritchie was here talking about basically how the miners should be holding silver in their balance sheet and so forth. And there was more the case of that back in the days, and today this rush towards selling their metal to accumulate cash rather is also telling about about where we are. It takes a bull market until people really change those sort of long-term types of decisions, even from a dividend perspective or just buybacks. When you have all these mines as such a, with incredible projects so cheap and giving you the opportunity to sort of expand your resource, in which most of the majors are facing that challenge today, of finding more ore. It's sort of shocking to see the shareholders continue to not back those decisions to support further M&A and other things. And I think ultimately we're going to go there, and that's really where it unlocks a lot of value and so forth. And so I guess being in a panel like this and also in so involved in this industry, to me is it's a pleasure, but also I think one of the best opportunities I've seen, at least in my career.
Likewise.
Well, what's the next mega copper mine that we see that will come online in the next 5 years? And is there a second one? Is there a third one?
I think a great question. I don't, Kakula, Kamoa, Friedland, Ivanhoe's Congo project, you can see expansions. Yeah, I'm a partner in a private equity firm called EMR Capital. We own a little project called Labambe in Zambia. We sold that to Cobalt, the Bill Gates backed company. they're talking about a major discovery. But what I know about that project is that it's very, very deep and will be one of the world's great water mines. Huge amounts of challenge to expand that project. I can't really see it. There will be expansions come out of some of the bigger projects around the world, but I don't think there's anything slated to come on stream that has that. And of course, Kamoa, one of the greatest discoveries of all time, and yet that's going to do 500,000 tons of copper. Well, if the demand projections are right, we only need another 20 of those by the back end of the decade. I simply can't see where they're coming from.
Yeah, that's the challenge. And so, where does the supply come from? I mean, like obviously, if the copper price goes to $8, then some of the consumption will abate. I mean, like some of it will, but still a lot of it is still coming. That's not enough of a price move. I mean, we might need $10 copper to really knock that down. So where does the supply come from?
Well, I don't think that a consumer's, of course, the copper input into an EV or a data center for that matter, not completely irrelevant, but at the moment, I think in an electric vehicle, there's probably $300 worth of copper. If you triple the price, for argument's sake, it goes to $900. So it adds, $600 to the price of that car. And of course, technology is reducing the cost of building those vehicles as we speak. So I don't think it has a material impact on that front. And the fascinating thing for me is these AI data centers, and they've sort of just come from nowhere. And now we're hearing, Chen says it best that the US is going to be out of electricity and rolling blackouts by the back end of this year. Private enterprise. I was sort of always confused about how are governments going to gear up to replicate our grids? Well, it's not going to be the governments; it's going to be Bill Gates and Microsoft and other guys who are building data centers that build their own power infrastructure for those data centers. That's where it's going to come from. That's where we'll see those demand drivers, they're largely impervious to price increases in the metal.
Yeah, and also, not just in the United States, everywhere. And then data is related to national security. So I'm not sure EU willing to share data with the United States, so they need to build data center over there, and then so on and so forth around the world. So there's so many data centers need to be built, and so much power needed for that. And as I said, just the solar, they use solar, they use wind, but solar seems to be the go-to. Microsoft already announced they're going to solar. And then you look at the first solar stock, investor already got it. So this is it's a perfect for setup. Of course, it's not just solar. You need a two source of power, you need a grid and solar, right? And then you need a battery backup anyway. So solar plus battery make a perfect combination for data center, especially AI data center going to build. We need a lot around the world. And then one thing I learned from the last copper bull market, remember copper used to be 70 cents forever, and then suddenly it went to $2, and people say, oh, that's great shorting opportunity. But actually there were some idiots shorting copper at that time, $1.50, $2, and then they got squeezed, and the dollar copper just continued to go up to $3. I see something will happen similar because the demand is so strong. And then people will say, oh, copper too expensive. Let's replace copper with this, with it. And then you find out it's very hard to replace. Copper is a very good conductor. What do you replace with, right? Aluminum. There is some short distance you can use aluminum to replace copper, but aluminum has a problem with oxide aluminum. The conductivity has issues. You need to resolve that. And when you resolve that, you need to use more aluminum. So transmission line is out of question for long distance. Short distance, maybe it's okay. So there could be some replacement. I saw there's a user asking about recycle. They're always going to be recycle. Actually, there could be, it also happened recently, people stealing, the Tesla charging station to get the copper out. But then you need more copper to build a new station. So So this they will make some impact, but actually what I found was when the demand came up, the copper price just blow out, and we're just waiting for that moment.
Hey, Chen, can I ask a question? What do you think is the ultimate strategy from China in terms of accumulation of copper? We've seen those charts of, imports of copper basically in significantly changing relative to the last 5 years or so. What do you think is, tell me maybe the long-term thesis there of copper coming just China alone. What do you think it's their main strategy with this?
Well, China is also it's a big exporter, right? China's EV going up like to Brazil a few 100% a year. So as I said, not just EV, now hybrid car also use more copper. So the new general modern car will use more and more copper. And so from China perspective, because they are so close to the user, they look at the order book. I chatted a little bit with Robert before. The reason they start buying in January at $3 something was not their genius. They just look at the order book. The order book for the copper related component just goes through the roof because of AI revolution, because EV. So they accumulate copper, and also they know the smelter. They look at the smelter and say, oh, they can't get enough ore. Actually, smelter has to pay negative treatment charge. And that's something we never heard of before, right? So they look at those because they're very close to the user, very close to the smelter. They look at, we have a shortage. So it was a speculation from January on. And then they sold some, to their benefit, they sold some during the recent copper round to $5. But again, this is only the first step. As you said from your chart, Tavi, that's great chart. So this is only the first stop.
I know we're talking about copper, but Chen, while you're here, the China expert, what do you make of the fact that China didn't buy gold in May?
Oh, China buy gold is very, very simple. It's just there's a deflation cycle. There's a lot of you cannot get a reasonable interest, right, for ordinary people, and then they cannot convert money out to the U.S. dollar, right? So the next thing is good. Liquid asset is gold. It's not only buy gold, they also buy silver. So I think just the investor got scared, and then the housing market keep going down. Recently, Chinese government tried to intervene, but only a few market actually stabilize. Still other markets still continue to go down. So people worried, right? If you look at I think Tavi, you have a very good chart in your presentation about the M2 in China. So the government print a lot of money, and then the money actually in person's saving account, and right, and then the saving account, what they are saving, they're putting a CD, losing money, negative interest rate, put in the housing market, losing money. So there are some people start putting money into gold. So, and then it just started. So I think it's a long way to go.
In the presentation by Tavi, he had the cup and handle in the quarterly copper chart. And that one, definitely, it's not a perfect cup and handle, but it's good enough. And man, if that does trigger, then copper's going a lot higher. I think the measured move target would be $8 a pound, but yeah, that would be incredible. And actually, I would love to see copper consolidate for a few more months here this summer and trade between $4 and $5, and then have that breakout happen in the fall. That would be really fantastic.
That's great. Yeah, I like Craig's $20 copper more, but $8 is a good start.
Yeah, let's get to A first.
I'd like it to take a little bit of a pause, or even go back further, because there's other projects that I'd love to buy. They're cheap now, but they'll get cheaper if the price comes back. But it won't be long. I think next year, I think you'll absolutely see $8, but I just can't see where it stops. And people I think I'm a bit mad when I say $20, $30 a pound copper. I remember my mentor and business partner, Owen Hegarty. He built Oxiana from a $6 million company in 1999 to, by the time we merged with Zinifex in 2008, it was a $6 billion company. And he was always out there on the streets screaming from the rooftops, telling people that when copper was 80 cents, that it was going to $4. And people thought he was absolutely insane. And of course, the metal price did go up 6 times, and all the way to about $4.60. I was a little bit shocked, the simple the copper price started sort of 6 months ago at about $3.30. You take off one mine, 400,000 tons per annum at Cobre Panama, about 1.7% of global supply, and that almost single-handedly was enough to jump the copper price by nearly 50%. That's only 400,000 tons of production. Imagine when we're short 6 million tons of production. I think you'll see extraordinary things. There'll be a lot of billionaires come out of this next copper boom. It's the best opportunity I've seen for asymmetric returns in the resource space in the last 25 years of doing this.
Do you know what's interesting about all this is that when you look at those calculations of how long it takes to go from a discovery to production, and people throw numbers like 10 to 15 years or so, those numbers are on the back of history of, call it, last 20 plus, or maybe call it 3 to 4 decades or so, which have been remarkably different than other periods, meaning, we've had extremely low energy cost. We had extremely low labor cost. We've had a world that it's been very globalized compared to other periods. So when I think about 15 years to go from discovery to production, I think it's completely understated. It might take even more in an environment where, let's just say, crude goes to some point between now and the next 10 years. Would it surprise you if crude is at $300 a barrel? It wouldn't surprise me. I don't think it would surprise anybody here. What if we see labor costs going drastically higher? Would it surprise you if we have a war at some point and even more disruptions when it comes to logistics, making it even more difficult to do all these things? No, it wouldn't surprise me. So this 15-year kind of environment, now, yeah, it's a big question. At what price of copper do we start seeing things start being under development and start seeing supply coming back online? But things that are being discovered today, boy, it's going to take a while for that to be under production. That's a little scary, actually. A scary thought.
Absolutely.
Ken, I want to ask Ken a question. Speaking of permitting timelines, so the state of Arizona is the copper capital of North America. What is a realistic permitting timeline in the state of Arizona for a copper project, Ken?
You know what? That's a very difficult one to answer because obviously there's.
That's why I asked you.
Yeah, thanks for that, Robert. I appreciate it. Yeah, good setup. No, listen, I think, when you look at, I'll take a step back. When we're building out our portfolio, we tried to make sure that we, look to acquire projects that we thought, let's just simply be able to get a drill permit as the first priority. And so you had to stay outside of some of these, state forests, national forests. Obviously you look at Hud Bay, and some of the trials and tribulations that they've had. You look at kind of Rosemont with BHP. I do think there are projects that have taken longer, and it's primarily because of the regulatory bureaucracy that goes along with it. So while, I'd like to, remain bullish and say with us having private lands and shallow near surface mineralization, we should be able to get our project permitted extremely fast. I'll point to Excelsior just up the road from us in Cochise County. They got their mine permit in 2.5 years. So I really do think it goes back to, and there's a lot of companies that do things the right way, but if you start building those early relationships and you start getting stakeholders on side, if there's areas where there's high employment rate and the need for local kind of community taxation, I do think you can move these things along a fair bit quicker. So the average timeline in Arizona is a difficult one because there's a couple of kind of, one-sided examples that are really difficult and others that are very positive. But, I do go back to thinking that whether it's be within North America and some of the points that, Chen and Tavi touched on, from a geopolitics standpoint, global trade, I just don't think we're going to be able to rely on global trade as we move forward. So I do think, domestic supply and being able to develop these resources responsibly is a separator, and it should be able to move some of these projects along. If I touch on, South 32 that bought the Hermosa deposit, they had zinc, and then they proved that their manganese was battery grade, so they were able to enter into the Fast 41 process, which is a piece of legislation that Obama put in place, which was essentially to be able to fast track the regulatory environment. And it was mostly meant for kind of roads and infrastructure. So if we need a bridge or if we need a road, let's not get bogged down with all of this regulatory elements. So South 32, to their credit, was able to utilize this Fast 41 because they had two critical elements being battery grade manganese and zinc. So they've yet to go through it. So that will be a great test case. And with copper being identified as a critical metal in the state of Arizona as well, that has a lot of the other copper developers, extremely excited. And that should be able to, shorten those timelines, should we be able to do it. But that being said, you try to minimize the regulatory overlap. If you're too close to a border, it can add different elements. If you're in a national forest, the additional regulatory bureaucracy is way too detailed in many ways.
Yeah, we'll stay out of the national forest. Just keep it simple.
Well, like I just said, I do think it's extremely important that within both, North America, Canada, and the U.S., that we're able to advance these projects much quicker than we have in the past. And I do think there is a pathway, and a lot of companies are starting to do things the right way.
There's a question from the audience. I don't know if anybody wants to take it, but I'll throw it out there. So there's a lot of copper mined in Africa. Continent of Africa is a very big place, so there's a lot of copper there. But a lot of the copper goes abroad. It's sent to Asia and what have you. Does the panel think that copper that is mined in Africa should stay in Africa as a social good? Obviously to build their power grid. There's a lot of people in Africa that do not have access to the internet. They don't have access to power. I don't know. Just throw that out there.
I think Chen should answer it.
Well, the Chinese are mining in Africa like crazy, right? So they view Africa as the continent, that's more friendly to China. So they have been pushing very hard to mine copper there. I do think, copper, maybe some of the copper should stay in Africa, right? Indonesia, actually, they have a policy to almost implement a ban of copper ore exit. I mean, that was about a few weeks ago, right? They're supposed to get into the ban. Indonesia, they say you have to refine here, and then we try to use the copper ourselves first before we export. But then they extended to the end of the year. So I see a lot of this type of nationalism, that they want to keep higher food chain. So want to go up the food chain. They're not just mine there. We want to refine there. And then we have copper we use ourselves, and then we export. So we're getting more and more, and then make actually copper more expensive.
I'll just give a parting shot. It's funny how market sentiment works. So one of the tried and true things in financial markets is sentiment follows price only all the time, right? So in May, we heard about copper everywhere. Everywhere you looked, everybody was talking copper. I was at the Dallas airport. People were having conversations about copper over $5 a pound. Well, June 17th, nobody except for us is talking about copper right now. So as a long-term investor, you want to swim against the crowd. So this is the time to be paying attention to copper mining companies. Freeport-McMoran's dropped 12% off its high. It's $47. It's always a good time to buy Freeport. And the juniors are just underloved, and companies on this panel today are tremendous opportunities, in my opinion. So buy when nobody cares about it.
Excellent point, Robert. So I see the big, like Freeport, they're quite expensive. I mean, if you go down to Hub Bay, it's much cheaper than Freeport. And then you go down to smaller producer, it's getting cheaper, and the exploration company extremely cheap. I think you hit a very good point, Robert, in your presentation. There's so few exploration company out there. The market cap is so little. So I think this will change, and then there will be a lot of very successful company out of this this downturn. I fully believe that. So finally, I mean, let me try to close here because I think we kind of exhausted all the questions. Thank you everyone for joining us.